please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Over the next 30 minutes, but let's kickstart what's hot with all the action on the last street. The markets took a breather today after 2 days of consecutive rallies, ending the day with slim losses. So PSU banks dragged the Nifty lower. It, however, managed to hold fort at the 10,500 level. The Sensex, meanwhile, ended the day down almost 100 points. Now, let's take a look at how the broader markets fared in trade today. They ended down more than 3%, led by a sharp fall in PNB shares. Mid-caps also took a beating in trade today versus the other indices. Well, let's get straight to the big development in the PNB fraud case. Nirav Modi's flagship international jewelry firm, Firestar Diamond, has filed for bankruptcy in the United States. Now, the company's diamond business is spread across the US, Europe, the Middle East, as well as East Asia. In its bankruptcy filing, the company has blamed liquidity and supply chain challenges for the crisis that it is facing currently. And while Nirav Modi files for bankruptcy in USA, back home in India, Punjab National Bank today informed the exchanges that fraudulent transactions related to the fraud could be more than 1,300 crore rupees than the 11,400 crore rupees that it had disclosed earlier this month. That's not all. The government also has sent a missive to public sector banks. Ritu Singh and Sapna Das are here with those two very crucial developments. Ritu, let me come to you first. The scam is very clearly only getting bigger. What exactly has been communicated so far? What do we know? And what is the action being taken?
Well, that's the question on everyone's mind. Is this the end of the big fraud that we've been speaking about, or are there more skeletons going that will tumble out of PNB's closet? But yes, in a late-night release to the exchanges, Punjab National Bank has clarified that there could be further additional unauthorized transactions to the tune of $204 million, which is roughly 1,323 crore rupees. This is in addition to the 11,400 crore rupee fraud that the bank disclosed on the 14th of February, which means, number one, the total quantum of the fraud is now much larger, closer to $2 billion, which is roughly 12,700 crore rupees. The second thing, this also means that the liabilities on the banks that have discounted against these fraudulently issued LOUs and foreign letters of credit, that also becomes larger. So far what we know is that the banks that are involved are State Bank of India, Canara Bank, Bank of India, Axis Bank, Union Bank, UCO Bank and Allahabad Bank. Could there be more banks that are involved? Could some of these banks have higher liability than what we are aware of? That is something that remains to be seen. But this number, additional figure of 1,300 crore rupees that has been declared, by the way, is exactly the same amount as FY17 net profit clocked in by Punjab National Bank. So that is the quantum of the increase. And now with the total sum being 12,700 crore rupees, that almost equals 50% of the company's, of the bank's market cap. So clearly, I mean, investors have not been taking this well. The stock has been falling since that disclosure was made. Almost 15,000 crore rupees, which is even higher than the fraud amount, has been wiped out from the bank's market cap so far. So yes, the question really comes down to this: is 1,300 crore additional the only addition we'll see to this mega fraud?
Oh yes, that is one amount we know. Is there going to be more disclosures going ahead? Thanks, Ritu, for that. But let's bring in Sapna now. Sapna, the North Block has instructed PSU banks to probe all NPA accounts over 50 crore rupees for possible frauds. Rules are very clearly getting more stricter for Indian banks now, Sapna. But how exactly will they enforce this? And is this just the first step?
Well, as a fallout of the Nirav Modi scam, the government clearly is fixing the responsibility of the top brass of public sector banks. And basically on that account, two clear directions that have come out. One, of course, all public sector banks will have to look into all those NPA accounts of 50 crores and above and, kind of find out if any frauds have been committed within them. That's one. Second, if there is any evidence of fraud which surfaces within these accounts, and that is 50 crore and above NPA accounts, they're supposed to promptly file an FIR with the CBI or probably even the ED and DRI, whichever the concerned investigative agency is. So this is a very clear directive that has come in from the government. Apart from this, they have also gone ahead and set up a panel consisting of, or rather comprising of, the executive directors of all public sector banks as well as the chief technology officers to come together and give the recommendations in 15 days on how the IT platforms, or rather the technology platforms of all the banks should be tightened further. More important, how there should be a common operating procedure for all the banks on this front, so that scams like Nirav Modi are they don't actually go undetected, or rather there is no eventuality of they happening in the future. So on both accounts, of course, the strong advisory in terms of checking frauds within the 50 crore NPA account, that's a pretty stringent one. And also in terms of setting up the tech panel, that is also equally important. Apart from this, we also understand the buck doesn't stop here. A series of measures the government has been taking right since this scam has started or has come to light. The next one that we get to hear is that probably the auditing system in the public sector banks is bound to get tightened, and we should be hearing soon from the government quarters on this front as well.
Okay, so the entire processes are likely to be tightened. Ritu, Sapna, thank you so much for taking us through those crucial developments in the PNB issue. But as the PNB fraud gets bigger and murkier, it is feared to damage the reputation of Indian banks globally as well. Lata Venkatesh asked Brian Moynihan, Chairman and CEO at Bank of America, for his view on the fraud, and he admits that frauds do bring a cautious approach towards Indian banks, which is not good for the country. Lata also asked him about markets and whether 2018 will be a volatile year. Here's an excerpt of that exclusive conversation.
We've had these intermittent problems. First, the bad assets, which could accelerate a bit more. Right. And we've had this bank fraud from one of the banks. Would you worry about these things?
Well, I worry about all those things. I worry about and you're not unique. There are frauds that go on around the world, and our job as financial institutions to try to make sure we're doing the appropriate due diligence to understand them. And so I don't know the particular details of this one other than what I read in the paper and on your station. But, at the end of the day, our job is to do great due diligence on clients and customers and on correspondent banks, and I think we'll continue to do that. But frauds are an unfortunate part of the business we're in, and what you want to do is do the work so that they happen few and far between, and when they do happen, they won't have a major impact on your company.
No, I mean, it's not a big fraud if you looked at the percentage. I mean, it's, I think, about 200 billion rupees for an industry that's over $1 trillion rupees. I mean, would you say that this is one-off, or what do your clients tell you? Are they worried about any part of Indian banking?
Well, I think everybody worries, and what will happen is the reaction to a situation like this, the couple situations have been in the paper, is everybody then sits back and is more careful with the banks involved and the quality of due diligence of what we do, and that tends to slow things down. And that's not good for a country like this country that needs capital and needs investment and needs velocity to grow an economy at 7.5%. Things have to happen, and if the banks around the world get worried about the amount of due diligence in terms of transactions and things like that, that is not good. But I think, like with everything, for a while, and then it'll kind of get to new normal and kind of work out from there.
Okay, so that is the Bank of America CEO talking about the repercussions of the PNB scam. But here's the big headline from the GST front now. The revenue mop-up data for the month of January is out. The data basically shows that GST collection up to the 25th of February stands at a little over 86,000 crore rupees. Now, that's almost equal to the collection during December 2017. So let me quickly take you through the breakup of the January GST revenue. While over 14,000 crore rupees has been collected as the central GST, around 20,000 crore rupees has been collected as state GST, and around 44,000 crore rupees has come in as IGST. The rest has been collected as a compensation cess. But meanwhile, a survey conducted by KPMG has come out with some interesting observations. First, the methodology. KPMG covered 232 senior executives over 15 sectors and asked them what has and what has not worked for them after the implementation of the goods and services tax. So here are the top 3 findings of that interesting survey. Number 1, majority of the respondents believe that the government is responding adequately to the industry's needs. However, over 60% believe that GST officers need better training, and over 50% think that a better outreach program is the need of the hour. Number 2, and this is a grouse, a clear majority are of the opinion that they haven't gotten enough time to implement decisions taken by the GST Council. The solution? Better intimation practices and a feedback process from the traders. 34% also believe that the centre and the state should come out with notification simultaneously. Number 3, the impact on pricing of product and services. More than 40% of the respondents believe that there hasn't been any significant impact on the pricing front. However, a significant 33% believe that there has been an uptick in this regard. However, there is hardly any disagreement regarding the long-term impact of the tax reform. An overwhelming 93% support the tax reform and consider that it will have an overall positive impact. From GST, let's move on to the big insolvency story of the day, and this is a CNBC TV18 exclusive news break. According to sources, a consortium of Dalmia Bharat and Piramal have emerged as the highest bidders to buy Binani Cements. Dalmia Bharat's bid was at 6,300 crore rupees, while Ultratech Cement was lower at 6,200 crore rupees. Remember, Binani's total debt currently stands at 3,800 crore rupees with a corporate guarantee of about 2,420 crore rupees. So that's the big exclusive story that CNBC TV18 broke right here first on CNBC TV18. Let's take a very, very short break. On the other side, US cable television giant Comcast joins the bidding race for broadcasting group Sky, challenging Rupert Murdoch's 21st Century Fox. How will that work? We'll tell you on the other side. Welcome back. You're still with What's Hot on CNBC TV18. Now let's get you the big international exclusive, and this is from Deal Street. US media giant Comcast proposed a cash offer to buy pay TV service provider Sky for a whopping £22 billion. Now this offer from Comcast is significantly higher than the offer put forth by Rupert Murdoch's 21st Century Fox. Comcast offered £12.50 per share for the company, and this is almost 16% higher than what Murdoch had offered. CNBC's Geoff Cutmore is standing by from outside the Sky office in London. Geoff, what makes this bid significant? Obviously, it's 16% higher. Is it a given that Comcast will emerge the front runner?
Comcast is hardly a household name in the UK, but all that now looks set to change with this $31 billion bid for Sky. Brian Roberts, the head of Comcast, says this would be a very good match. Sky produces content, it has a digital platform where it distributes the internet, and it also has a news business. In many ways, it would be a perfect fit with America's Comcast. The trouble at this point, Rupert Murdoch has a very strong interest in perhaps raising his bid. Already, Murdoch's bid on the table at £10.75p. It can't compete with the current £12.50 being offered by Comcast, but of course he may come in with something significantly higher, and he has the advantage of already owning 39% of Sky. At this stage, the regulators here in the UK would probably see somebody other than Rupert Murdoch as favoured to take Sky. The analysts say the bid still undervalues the potential for this company, and as such they and the market think the money will go higher. For the time being, Sky putting out a bland statement effectively saying directors must understand their fiduciary rights towards shareholders, and they watch the bid with interest. This is Geoff Cutmore in West London at Sky.
Okay, Geoff, thank you so much for taking us through that. That's Geoff reporting from outside the Sky headquarters in the UK. But here's the other big international story today. US President Donald Trump has raised the issue of the high import duty on motorcycles in India for the second time this month today. This despite the government lowering the duty from 75% on the capacity above 1200cc to 50%. Trump said that the US was getting nothing from the reduction in duty, meaning US companies were still paying high tax for exporting to India, while Indian motorcycle companies were paying zero tax exporting to the US. Referring to his conversation with Indian Prime Minister Nirav Modi, this is what the President Trump had to say.
India sells us a lot of motorbikes. So when they have a motorbike, a big number, by the way, they have a company that does a lot of business. So they have a motorcycle or a motorbike that comes into our country, the number is zero. We get zero. They get 100%. Brought down to 75, brought down now to 50. Okay. And I wasn't sure. He said it so beautifully. He's a beautiful man. And he said, I just want to inform you that we have reduced it to 75, but we have further reduced it to 50. And I said, what do I say? Am I supposed to be thrilled? And that's not good for you people, especially as governors. It's just not right.
Well, the bark from the US so far has been worse than the bite. That's the former deputy chairman of the Planning Commission, Montek Singh Ahluwalia. When asked about the tariff concerns raised by the United States, Montek had a simple advice for the US. Go to the World Trade Organization and take up the issue.
If President Trump feels that we're doing something wrong, he should go to the WTO and seek the permission to do whatever is necessary to counter that. So far, frankly, the bark has been worse than the bite, because they haven't actually taken action against us in that area, but they keep threatening it. When people hear the United States uttering protectionist sentiments, it makes those who want to push protectionism look sensible and contemporary.
Meanwhile, Triumph India MD Vimal Sambli also weighed in on the hot topic of the reduction in the custom duty. Speaking to CNBC TV18 at the launch of the company's latest offering, the Bonneville Speedmaster, Sambli said that the reduction in the custom duty from 50% to 50% from 75% is only for completely built units or CBUs, and the volume of these motorcycles isn't much. But manufacturers that assemble in India have been taxed higher, both as part of GST as well as the announcement in the new budget. He explains basically how the government's move is counterproductive for the sector.
What we thought as a direction of Government of India was to make in India. So a couple of years back, we thought make in India means first step is to assemble in India, make the segment large, and then probably manufacture in India. Right. So we changed our whole portfolio from to CKD or assembled in India. But we got twice hit, one on GST time when 3% was increased 500cc plus, and then in the recent budget announcement they increased import duty by another 5.67%. Now coming back to your question on CBU, so in India the CBUs are bought by two routes. One is CBU through FTA, right, that is free trade agreement that you have with Thailand, and CBUs which are brought from rest of the world, that is US, UK, France, Italy, wherever. So they have bought the duty down of the CBUs from the rest of the world. Now that segment in India, according to the data which is available, if there are 100 motorcycles sold in the superbike segment, 10 or 15% of the bikes come in that segment. Right. So 85% of the bikes in this segment are today done CKD.
So basically bringing down the duty from 75% to 50% does not really have help you in any meaningful manner.
Doesn't help. And according to me, our understanding of ours is that the Government of India wanted you to assemble in India, put infrastructure, put people, right, you get a recruitment. When you promote CBUs, it's almost like trading in India, right? You're trading only in India. There's no manpower really required. You're coming, bringing bikes and selling out.
So what would your suggestion be in this case? I mean, if the idea is to bring in more investment, to get bike makers, to get more people to come here, set up plants, employ more people, put in their investments, I mean, what is the right way to go about it?
If you look in our industry, if you look at the competition which is available in India, so everybody has taken a step of assembling, because as the first step you can take towards manufacturing. Right. So I think the Government of India today should incentivize this niche segment, which is not large, to at least allow them to assemble in India, give them little incentive, then just trade in India. So my always suggestion, and that's what we have written to the Ministry of Finances, please relook into this custom duty increase. One side you have decreased CBUs, of course they were sitting on a very high price, but that segment is not large in India. But incentivize where people are investing in India by assembling in India.
Okay, now moving on. The government is planning to link driving licenses with the Aadhaar number in order to weed out fake licenses. CNBC TV18 learns that the IT Ministry is already in talks with the Road Ministry in order to fast-track the linkage. Ashmit Kumar has more details. Ashmit, why driving licenses now?
Well, even as the Supreme Court is hearing a batch of applications of petitions against the application of Aadhaar on a mandatory basis, we've learned from speaking from highly placed sources within the IT ministry that they at the same time are seeking a linkage of Aadhaar with one's driver's license, with your driver's license. That's not all. What IT ministry sources tell us is that the main agenda, the main intent behind this move is to make this linkage mandatory in nature. Keep in mind that various petitions are on that point itself on why there should be a mandatory linkage. Nonetheless, the IT ministry will be pushing forward for linkage on a mandatory basis. Another key aspect to be kept in mind is that this will be done on a pilot basis at first in the state of Uttar Pradesh, and that this will be fast-tracked. At least that's the intent behind as far as the IT ministry is concerned. And the one thing that needs to be kept in mind that this is just the first step, that after perhaps a successful implementation, the IT ministry as well as the roads ministry will be looking at introducing the linkage of Aadhaar with not just your DL or your driver's license, but also vehicle registration. As of right now, we understand that the roads ministry is considering this proposal having been mooted by the IT ministry and will decide on the course going forward. Back to you.
Okay, Ashma, thanks for taking us through that. But let's get to the big national story of the day. More than 60 hours after the death of Indian actress Sridevi, today the Dubai police have given the clearance letter to Sridevi's family. The police have ruled out any foul play in the actress's death and said that she died on account of drowning after losing consciousness. The chartered plane carrying her mortal remains has left from Dubai and is expected to land in Mumbai in a while from now. The Kapoor family has released an official statement containing details of her funeral and last rites. The cremation is scheduled for 3:30 p.m. tomorrow. Well, on that note, we will have to wrap up this edition of What's Hot. Many thanks for watching the show. Markets ended slightly lower after 2 sessions of gains, while the Nifty held fort at the 10,500 level despite selling pressure. Sensex closed in the red, down almost about 100 points. We will bring you all the trading action and the top stocks to watch for tomorrow. Only on Markets Today. Talk back coming up next. We'll be back with India Business Hour in 30 minutes with the top stories of the day. Don't go anywhere.